Hi there. In this lesson, we're going to focus on Forex trading, which is one of the most traded financial markets with trillions of dollars in volume daily. But let's go back many years ago so you can fully understand how trading began and then what product traders are exchanging. So, trading in the past. Many years ago before Christ, trading involved the bartering system, which was really used a lot by exchanging goods for goods. Trade was carried on both by land and by sea, and the main articles of internal trading were cloth, food, grains, spices like salt, bullion, and precious stones. Trade was carried on by road and through rivers, too. And during the 6th century before Christ, the first gold coins were produced. Those acted as currency. So people started to use gold coins as a form of trading. The struggle of modern trading. Years later, metal coins and paper money were manufactured, and they improved trading and the overall payment system. But even with that, the world needed economic stabilization because of wars and other factors. So the first steps of modern Forex trading began during the Second World War. To find an alternative for a new global economic order, the United States, Great Britain, and France all met at the United Nations Money and Financial Conference in Bretton Woods. And this location was chosen because the United States hadn't yet started suffering from the war. After the meeting, modern trading started. Now, the meeting between the US, Great Britain, and France gave some positive signals about a stable environment of global economics. And during this time, the modern Forex history began by involving foreign countries. During these times, the United States was holding the most gold reserves in the world, and they were pegged with gold. Other foreign countries would use the US dollar to transact, which increased the popularity of the US dollar, and soon the US dollar became the world reserve currency. The failed agreement. Since the US dollar became one of the world's most used currencies, the European countries were trying to react to the rise of the dollar, but it really didn't go well. The European community established the European Joint Float, formed by West Germany, Italy, the Netherlands, Belgium, Luxembourg, and France. Now, the Joint Float had the main goal of moving its dependency off the US dollar, but the agreement had mistakes, and it collapsed in 1973. The fall of the US dollar. The rise of the US dollar didn't continue for a long time because it affected American companies and the exporting system. The rise of the US dollar had a negative effect on US exporting companies. The chairman of the Federal Reserve, Paul Volcker, raised interest rates, and this raise caused a strong US dollar and decreasing inflation, which was great. But because of the weight of the US dollar in third world countries, they were really under debt. And that led to many American factories closing because they just couldn't compete with the foreign factories. The stabilization of currencies. As a solution to offer stabilization of currencies and economic system in general, another meeting was held, and the most powerful economies in the world, including representatives from the United States, Great Britain, France, West Germany, and Japan, held a secret meeting in 1985. The details of the meeting were leaked by the news, and the countries made a statement to encourage and appreciate non-dollar currencies. Now, since that meeting, people realized the need for potential profit in the world of currency trading, and the steps for an improved and modern trading system really began. The beginning of modern Forex trading has started. In 1992, the European Union was established, and that led to the creation of the euro. Now, the euro was traded with other pairs like the US dollar, the Japanese yen, the British pound, and other currencies. In the 90s, Forex trading wasn't really popular at all because of the conditions that existed. In these years, a low number of people had access to computers and really knowledge about trading. So traders during these times were trading Forex and stocks mostly by going to physical exchanges or banks that would only buy and sell currencies with physical notes or paper money. Since then, the Forex market has increased a ton in terms of trading volume, but also in the number of people who trade Forex. Today, the Forex market is the most traded financial market with more than $5 trillion in daily volume. In the next lesson, we're going to learn about one of the most popular metals, which is gold. See you there.